Good afternoon, everyone. Good afternoon or good morning to you if you're Central Time Zone like myself. I'm so excited to be here with you all. It's our very first Trading to Truth Tuesday. That's Trading Truth Tuesday. That's 3 T's and it's Disciplined Trading Team bringing it to you here live on YouTube. So I want to warm up this chat to get us started. Go ahead on and drop the zip code, area code, probably, or better yet, the state that you're watching this live from right now. I want you to drop your state in the comments right now. Let's go ahead and warm up this chat right now. Let's get it started in here. You're here for a very specific reason, and I don't believe anything, absolutely nothing happens on accident. Nothing happens on accident. I'm going to bring up these comments real quick just to make sure I've consistently am able to see what you guys are saying in the comments. Let's get it right here. Perfect. Make sure I got it muted. Perfect. All right, I got the comments. We're just about to get started. We're going to be busting three major myths about trading, about investing, live today on YouTube. If you're new to trading, I want to know right now if you're new to trading, because you're the perfect person to hear this right now. Because if you're new, that means you don't have a bunch of stuff that you've been told, that you've been, how shall I say it, exposed to. So you don't have to worry about dusting yourself off, right? If you've been around trading a while, drop in a comment. How many years have you been trading? How many months have you been trading? If you're watching this back on replay, if you're part of that rewatch crew that's watching this and it's no longer live, I want you to drop in the comments. Are you new to trading? If you're new to trading, I call that, less than 3 months. If you're new to trading, less than 3 months, drop that in the comments. Let me know. This live is for you. If you've been trading for a while, yep, we got to dust you off a little bit. We've got to bust these myths so you can get on the right track. In your trading. All right. So with that being said, I see a few in the comments. Appreciate you being here. I lost my HDMI. Give me a second. There we go. Perfect. All right. We're going to get into it. We're not going to belabor the point. I want to make sure I'm able to deliver this to you guys in under an hour. Some of you might be on lunch break. Shout out to everybody that's on lunch break, investing in themselves right now. And some of you may be, working for yourself. You may be at home, working from home. That's cool too. This live is for you. Now, it may make you a little uncomfortable. I promise you, if I'd heard this when I first started trading or a year into trading, I'd probably be a little uncomfortable too. And that's quite all right. There's nothing wrong with that. I promise you there's nothing wrong with that. But we're going to get into those myths and everything that you need basically to understand what's happening. Now, what I will tell you is towards the end, right? Towards the end of this live, if you stick around to the end, which I hope you do, because I am going to cover a chart, top to bottom, the disciplined trading way. So throughout this live, I want you to drop in the comments any ticker symbol, stock, asset, commodity that you want me to analyze from top to bottom on the charts. I'm going to do that for you here, right? I'm going to do that for you here live. So be sure to stick around to the end. You won't regret it. I promise you, you won't regret it. All right? So start dropping those ticker symbols in the chat right now. Start dropping them in the chat. Anything that you want me to take a look at live here today. All right. So with that being said, let's get into a few of these myths. And why I felt like this was a good first live to kick off the channel was primarily because these are things that I wish I had known when I first started trading. These are things I wish I had known year one of trading. Now, I'm not speaking to investing, although these things would have helped me also from an investment standpoint. These are things that I would have wanted to understand clearly as quickly as possible. So The biggest myth, the biggest myth that you hear out there is the answer to the question why 90% of traders fail. That's a large number. That's a large number. And what are some of the things that you may have heard? Drop those things in the comments. What are some of those things that you may have heard along the way? What are some of those things that you may have heard along the way? I want you to drop those in the comments to think through, because this will help you from a journaling standpoint, some of the things that may have impacted you and may have impacted your trading. Okay? I want you to drop those in the comments. Yep, I see you. I see you. Now, with that being said, every week I'm going to be back here 11 a.m. Central, 12 noon Eastern. Had a few technical difficulties, so we started a little bit late today, but we're here nonetheless. I'm going to give you the unfiltered truth every week about trading that the gurus, the whales, may or may not want you to hear, but they're definitely not spelling it out clearly. They're definitely not spelling it out clearly. And we're going to get into 3 of those myths today. The number one myth, let's get into it. And don't forget to drop those ticker symbols in the chat. Don't forget to drop those ticker symbols in the chat as we're going along, because I'm going to go top to bottom on a chart at the end of this live, right before we finish. The number one myth, right? Grab your pen, grab your paper. Make sure you're plugged into what I'm about to say. The number one myth: traders fail because they're too emotional. How many times have you heard that? Traders fail because they're too emotional. How many times have you heard that? Think about it. Think about it. How many times? Too emotional. How many times do you hear the word emotion? How many times do you hear the word emotion? Just simply hearing the word, right? How many times do you hear that? Because I know for me, it was consistent, right? And I had a lot of emotions. Let's be clear. I wasn't void of emotions by any stretch of the imagination. I wasn't void of emotions. I felt those emotions, right? But how many of you have heard that one specifically? That's what I'm really after today. I want to know what you've been hearing for yourself. But that's the number one myth, is that traders fail because they're too emotional. And I'm going to dispel that for you today. I'm going to dispel that myth for you today. Part of it is the reason why it's a load of garbage in the industry. And I'm thinking about garbage because it's trash day in my neighborhood. The biggest lie is this, and it's garbage. The truth is, they don't want you to know, and that I figured out the hard way, emotions are normal. It's a human response. You can't stop your emotions unless you're about to expire. And I don't want to get morbid, but as long as your brain is functioning properly, you still got breath in your body and blood running through your veins, you can't stop your emotions. Emotions are normal human responses. When you put your hard-earned money into the market and it's at risk, your brain is literally designed to make you emotional. It's called a survival instinct. Now, the gurus might tell you control your emotions, but that's like telling you to stop breathing. It's not going to happen. How is that even possible, to control your emotions? Now, you may be able to cry a little bit less. You may be able to laugh a little bit more. But generally speaking, when you put your hard-earned money into the market, you're going to feel something. There's no doubt. And it's okay. You're human. This is a normal thing, right? Sometimes you don't want to go with the herd in trading and investing. Sometimes you don't want to be with the majority. In this instance, you want to be with the majority. You want to be human. You want to have a human response. It means you're alive. It means you're still kicking. It means nothing's wrong with you, right? Successful traders don't eliminate emotion. They don't. It's not possible. They build systems that work with their emotion. That's what the big guns do. That's what the gurus, the whales do. They build out systems that coincide and work with their emotions. I've been around millionaire investors and traders, and they get anxious, they get excited, they get nervous, they get emotional. Why? Because they have a functioning brain, blood running through their vessels, and thankfully, they're still breathing. The only difference is they have rules to protect them when the emotions start driving really high, when things get really intense. They've got a specific set of rules that keep them grounded. Okay? They don't fight their humanity. They plan for it. They know that they're going to react, and then they have a plan for those reactions. They have a system, they have a structure, they have a mechanism, a machine to take care of them regardless of their emotions. The real problem isn't the emotions though. It's the lack of preparation, right? You've got to prepare yourself. You've got to prepare yourself in order to adjust, have a system for the emotions when they come up because they're gonna come. Most traders fail because they don't have clear rules for what to do when the emotions hit. It's like flying a plane without the indicator panel in front of you, without mission control in your ears, or the tower, if you will, if you're at the airport. Without that, you're flying blind. That's a system that supports pilots. You're a pilot if you're trading and you need a system. But when you have a step-by-step system, emotions can become irrelevant because you've planned for the fact that you're gonna be emotional. And speaking of knowing when emotions hits, I think one of the most important things you can do is understand your trader psychology, understand your trading personality. I think it's vital to setting up your systems for investing in trading. I wish someone had said to me, Jamila, you got to figure out what your personality style is for trading. There's a level of risk, there's a style, a timing that's most suited for your personality. I wish someone had done that for me and said, just slow down a second before you decide if you're a long term investor, a swing trader, a day trader, or whatever it might be, position trader. Here's what you need to figure that out so that you build your strategies and your system around that personality style. Because no one person is the same. No one person is the same. I created this assessment quiz to help you determine what type of trader you are. It is a definitive first step towards building a trading system that will be responsive to your emotions. I'll drop the link in the comments. It takes about 5 minutes and it's totally free. So if you want access to that, I'm checking the comments as we're live. Be sure to drop a yes in the comments and I'll send you the link to take that assessment, to take that quiz so that you can really build the system that works perfectly for you. Okay? I'll drop that in the comments. I'm just checking those comments, make sure, see who wants it. Yep, I see a yes. Got you covered. I got you covered. Let's get into myth number 2. All right, myth number 2. Should I get rid of that? Let's get into myth number 2. You need to take more risk to make more money. That's myth number 2. So that means you've got to risk more money in order to make more money. That is a big, fat lie. It's absolutely the worst thing, the absolute worst thing you can do. Trust me, I know. This makes me physically sick to my stomach because it's destroyed so many trading accounts, including my own. I blew a 5K account, 10K account, lost 25K plus, maybe even more. But I got to stop because sometimes those emotions, just thinking about it, may cause a fear reaction in me. Just because I know I'm capable, because I can get emotional, I'm capable of blowing an account. But you don't need to risk more to make more money. Number one, the big risk creates big emotions. So the bigger the risk, the bigger the emotions. And we already know we're going to have emotions. We definitely don't want bigger emotions. And that creates big mistakes. Big risk equals big emotions equals big mistakes. When you risk 10% of your account, and be transparent, I've done it. I've risked as much as 25% of my account. It's absolute insanity. You're not thinking clearly anymore. At that point, you're gambling. Think about it. If you risk 10% of your account, that's 10 trades and your account's blown. You risk 25%, that's 4 trades and your account is gone. Your brain goes into complete panic mode and you make decisions based upon fear, not logic. At this point, logic is out of the window. Number 2, consistent small wins compound faster than the occasional big win with a bunch of bad losses in between. The math doesn't lie. A trader that makes 2% per month consistently grows the account faster than the average annual return of the S&P 500. In most cases, 2 times as much. Because if you think about it, 2%, and this is not compounded, just 2% means you've grown your account by 24%, not compounded. Who wants to consistently outperform the S&P 500? Sign me up for that type of wealth. Number 3, professional traders risk tiny amounts per trade. That's what they do. The best traders I know, every book I've read, every account I've studied, they risk 1 to 2% per trade. That's it. If it's good enough for the big dogs, it's good enough for me. It's good enough for you. Whether that's a $500 account, a $1,000 account, a $5,000 account, or even a $30,000 account. Whatever that account size is, doesn't matter. 1 to 2% risk. This is why I'm so passionate about our disciplined trading community. We teach you to think like a professional, not a gambler. And if you're starting with a small account, I'm re-releasing, it's coming out July 1st, my How to Start Trading with a $500 guide. It's an ebook that shows you exactly how to grow an account safely. If you go ahead and get that assessment done, you're going to automatically get an email. You'll actually get it on June 30th instead of July 1st with the public. You'll get that ebook for free. For free. I'm trying to give as much as possible to keep people from blowing accounts and to keep people from thinking they have to do more in order to get more. It's not true. Now let's get to the last myth that we're going to bust today. And don't forget, be sure to drop in the comments. I'm checking them. Be sure to drop in the comments the ticker symbol that you want me to cover at the very end. Myth number 3. Trading is passive income. How many times have you heard, man, I just want to make some passive income, some supplemental income, things of that nature? How many times have you heard that? I'll tell you, this is one of the most dangerous myths because it sets the wrong expectation about what you actually have to do. Number 1, trading is a skill-based business. It's not passive income. You don't become a surgeon by watching YouTube videos. You don't become a lawyer by reading blog posts. Trading is a profession that requires development, it requires practice, and it requires constant learning. Anyone selling you passive income is lying because you're going to have to do something. I'm not saying you got to go to school for 8 years or 6 years because that's absolutely not the case. And I'm not saying you have to have the most complicated system that takes you 10 years to build and test for that matter. I am saying you have to master the tools that you choose and the system that works for you. You have to master it. You have to master it. And I believe that how you go about mastering it is number 1, figuring out your personality type. Managing your risk appropriately, putting together a system that helps you to manage it appropriately. And then lastly, I think you have to be in community. I think it's really tough to do this on your own. Just like anything else, it's very tough to do on your own. You want to be in a community of people doing the things that you're doing. The second thing around this myth is successful trading requires active management and decision making. So you can't be passive. Now you can set up a system that triggers entries and exits and trail stops and things of that nature, but that's still not passive. That's still active. Even swing traders who hold positions for days or weeks are actively monitoring their risk, monitoring market conditions, and making decisions. There's nothing passive about it. And that logic tells us when we hear the word passive is that we can just kind of take a step back, take our hands off of it. And that's just not the case when you're trading. Third point, the passive income myth leads to undercapitalized and unrealistic expectations. People think that you can throw $1,000 at the market and live off the profits. Not possible. 1,000 is just not enough money. You might be able to do it on a $500,000 to $1 million if you live a very conservative lifestyle, but 1,000 ain't gonna get it. And that's what frustrates a lot of people when they first start trading. When it doesn't work, people quit. So many people left the market after 2020. Got in, things were running, things were great. It was awesome. Like it was just like, yeah, everybody's winning in 2021. It was amazing. So many people entered the market. I thought it was a great thing until I saw so many people exit because of this myth. Because it's not passive. It requires work. It does require discipline. It requires a very good system. And this is why I'm so focused on education first in our trading community. We're not selling dreams. I'm not here to sell you a dream. We're building real skills. Skills are things that you can continually use. Skills are things that you can teach other people, your family, your friends, how to use. And it starts with understanding what the charts are actually telling you, not what you want them to say, not what you hope they say, because you've got a big 20% of your account invested in this trade. That's what I want to help you avoid. That's what I help the disciplined traders in my community avoid. So that's the three biggest myths for trading. Number one, in recap, traders fail because they're too emotional. And I'm going to put them back on screen for you so you can see them. Traders fail because they're too emotional. That's number one. That's number one. Traders fail because they're too emotional. Number two, you need to risk more to make more. And that's a surefire way to be out of the market done very quickly, which is what happened to so many people right 2021, 2022, and 2023. They left the market. And then lastly, trading is passive income. It is not passive. All right? It's not passive. Not by any stretch of the imagination. It's not passive. So those are your three myths. We busted them. I want you to drop in the comments. I'm looking, I'm checking. Did I miss any? Miss? Drop something you've been hearing and feel like it's holding you back, or that might not be true, or that you want to find out. Do you need to know how to do this, or do you need to forget about this? Whatever that myth might be for you. If you're watching this on the replay, same thing. Drop it in the comments. I mind all the comments personally myself. Okay? I'll grab all the comments, whether live or on the rewatch, and I'll address them in a future live. So don't hold back. Blow these comments up. All right, now I'm going to go through the comments, look for that symbol. Hold on. I'm going to look for that symbol, and we're going to break that down top to bottom. Top to bottom. So let me go ahead and grab my chart. And I'm looking in the comments as I'm bringing up my trading view. I use trading view. It's one of the most simple, easiest platforms out there. And I'm gonna go ahead and do two. I've got this one actually pulled up. I was looking at it today primarily because it had just hit or came close to hitting its all-time high. So Shake Shack. If anybody's ever had a burger there, I don't know if it's the burger or if it's the way they toast the bun. That's so good to me. But this company has done really well, went public in 2015, hit an all-time high in 2021, came back and tested that high December 24, and we're right back there. And we're about to find out really quickly if it's going to break through that high. Now, how I would chart this top to bottom is starting on the monthly chart. I'm going to find my support and resistance using mountaintops and valleys. And for anyone, any of my accelerators in the community or my trade team, you know, I'm looking for mountaintops and valleys. Go here. It's a good spot. And then I'm going to actually put one at the all-time high. And I'm going to give this one a weekly support and resistance because it's just not as strong as the others, in my opinion, at first glance. Yeah, I don't like it at all, actually. So I'm going to go there. All right, so those are my main key levels. Again, not exactly perfect, not exactly to the cent because I'm not using a magnet and I'm doing this real time with you. But you can mark your all-time high, which is a little bit higher, right around 139. We're super close to that right now. You can mark a weekly/daily support and resistance with a massive gap here on this most recent run up at 104.67. I've also got some support at around 179, call it $80. And then you got the all-time low right around 30.76. All right. Now, this one, how I like to set these charts when they're looking like this. You can really see that this chart, for the most part, since inception, has kind of traded across. You've had moments where it's traded up, traded up, traded up, and you have moments when it traded down. But for the most part, it hasn't really broken out of this 140 spot and it hasn't broken below this 30 spot. And we've had a couple tests around 104 and 80. So when you see it kind of doing that and we get to an all-time high yet again, of course, there's only two ways this thing can go. I'm going to go down to the daily chart. Up or down, sideways. Let's give it a third. And in this instance, we're right up against resistance. You have two setups that you could trade. You could trade this down, anticipating that it might close this gap and go back to this 104 daily support and resistance, or you can wait. You can wait for Shake Shack to break above, retest the all-time high, and get into the trade here, anticipating that it's going to trade higher now that we've tested this level again. So those are the two setups that I would be talking to the accelerator community and my trading team right now about. Is there opportunity to trade this down? Do we have some signals, some confluences on a lower time frame, that some confirmations that will say, let's trade this down? Or should we be waiting for it to break above, trade away a little higher, and then come back and retest 140? So those are the two trade setups for this particular stock. And then next, I'm going to do a favorite that is set kind of in a jam, right? And I've actually already got this one done. So I'm going to erase everything on here. And we're going to chart it again from top to bottom. And obviously, Apple has way more history going back to 81 than Shake Shack. So I'm on a monthly chart. I'm going to go with 182, maybe 126. Definitely going to put the all-time high on there. And if I go back further, which we're a long way from here, but I would definitely have one right here, which was the 2018 high and the COVID low right here. This COVID low looks like absolutely nothing now. The further you get away from it, the less important it looks. I'm actually going to change this one to horizontal ray because it's not as strong. It's important, but it's not as strong. And I'm going to also put one here. And this area is really more of a zone. So let's box this in. So write these levels down. 260, which is the all-time high. 125, 59, or I'm sorry, 57. And then my daily support and resistance, which you're going to see a little bit better when I go to the daily chart, 183, 168. Those are the levels that I'd be paying attention on a shorter time frame. I also see I didn't necessarily see this because Shake Shack was trading sideways, but it looks to be a little diagonal support and resistance as well. Let's see. So I'm going to go ahead and do my outer trend line. And that one. It looks like those are holding up. So what would I do with this right now? Well, I could tell you the real story on this one is on the daily. You can see that Apple since April 14th has been trading sideways. But what's super interesting is that it continues to make lower highs. So here's the low on April 21st. This is a higher low on May 7th, and then another higher low on the 23rd of May, and then another higher low on June 18th. And then starting here on May 1st, you had a high, and then you had a lower high on May 14th, another lower high here on June 30th. Anything below this point right here makes this a consolidation pattern, something like a pennant that just keeps getting wound up, right? Until it gets really tight and pops out. So price could keep winding up in here just like this until it gets to kind of like a bottleneck on the interstate, and then it breaks free and starts trading in one direction or the other. If I had to guess, I believe the direction, provided nothing crazy happens on a global level, I believe the direction is going to be up. But no one knows the real answer. I'm going to be prepared either way. All right? So that's the two charts I did. I gave y'all a bonus today, especially since this is our first go round, right? I wanted to make sure I gave you a little bit extra. I hope that this was helpful. The 3 myths that we busted, I hope that it made a difference or makes a difference for you going forward. I know that it would have changed my life if I had heard the 3 things that you heard today. Not to mention, you got 2 setups on both Shake Shack and Apple. Gotta probably wait a little bit for Apple until the breakout, but ultimately, you got the setups, you got the levels. Now you can go implement a trading strategy that should include what you're gonna risk, no more than 2% of your account, right? Don't forget those resources. They'll be linked in the comments as well as the description if you're watching this on replay, so that you can access that personality trader quiz, right? So you can figure out your trader psychology. That's very specific to you. And when you sign up and you do that quiz, you do that assessment, you're automatically going to get an email when my new updated version of how to trade a $500 account ebook comes out. So those are 2 things that you get free, right? You're part of this community now right here on YouTube. I'll see you all next Tuesday, same time, hopefully on time, same time, no technical difficulties. I can't wait to do this again with you. Have a great rest of your Tuesday, a great rest of your week. Close this week strong, close this month strong. All right? Stay disciplined. I'll talk to you soon.